I want to tell you about something the world's most powerful financial institutions have been doing out of public view that almost nobody has explained to ordinary retirees. Picture the central banks, the national banks of countries all over the world, the institutions that literally create the money we all use, staffed by some of the most sober, best-informed financial minds on the planet, moving gold bars into vaults by the truckload. Not a little. Enormous record-breaking amounts. For 3 years running, they've bought more than 1,000 tons of it each year, a pace the world simply hadn't seen in modern history. In 2025, they set an all-time record, and it led to a moment that should have been front-page news everywhere, and somehow wasn't. For the first time since 1996, the first time in nearly 30 years, the world's central banks now hold more of their national savings in gold than in U.S. government bonds. Read that again slowly. The most powerful money managers on earth are now, collectively, choosing ancient metal over modern American debt. That's a genuine turning point, and it happened while most of us were looking the other way. So, here's the question I want to explore with you today, honestly and carefully. If the smartest institutions in the world are moving toward gold, what are they seeing? And is it something you, as a retiree protecting the savings of a lifetime, should understand too? Because it isn't only the central banks. All across America, everyday retirees, careful people who spent 40 years building a nest egg, are moving a slice of their savings into gold in numbers we haven't seen in a generation. And today, we're going to walk through the 5 real reasons why. Not hype, not fear. The genuine, thoughtful, time-tested reasons that are drawing sensible people toward this ancient metal right now. And let me be clear about the approach. This is not a fantasy that gold is magic and only goes up. It isn't, and we'll be honest about that before we're done. The goal is to understand something the world's biggest players understand, so you can decide, with clear eyes, whether it has any place in your own retirement. By the end of this, you'll understand gold better than the vast majority of people who own it. Let's begin. The first reason is the one that sits in the back of every retiree's mind, spoken or not. Gold is the oldest, most proven defense there is against your dollars losing their value over time. Let me put this in plain terms, because it's the whole foundation. Inflation is just the slow shrinking of what your money can buy. You have lived this. Picture an older retiree standing in a grocery aisle, remembering when a loaf of bread, a gallon of gas, a postage stamp, and a cup of coffee cost a small fraction of what they cost today. That wasn't the bread getting more valuable. That was your dollar getting weaker. And here's the part that matters so much when you're retired. When you were working, your paycheck could rise to keep some pace with those prices. But when you're living on a fixed pool of savings, inflation becomes a thief that never knocks. Every single year it steals a little more of what you worked for, and there's no raise coming to make up the difference. Now here is why gold enters the picture. Gold's entire reputation, stretching back literally 5,000 years, is that it holds its value across time in a way paper money simply does not. There's an old saying that stood up remarkably well. An ounce of gold bought a fine toga in ancient Rome, and an ounce of gold buys a fine suit today. Across empires, across centuries, across the rise and fall of 100 different currencies, gold has held its purchasing power. And the reason is beautifully simple. The dollar in your wallet is, at its heart, a promise. A piece of paper backed by the word of a government, and a government can always print more of it. Picture a printing press running fresh bills, the stack getting taller and taller. Every new dollar printed makes the ones in your pocket worth a little less. But nobody can print gold. It cannot be created out of thin air, conjured up by any politician, or manufactured to pay off a debt. It has to be dug out of the earth, at great cost, in tiny quantities. Picture a remote gold mine, heavy machines, tons of rock, and a tiny amount of metal at the end of all that work. In all of human history, all the gold ever mined would fit into a space smaller than you'd imagine, and it only grows by 1% or 2% a year. That scarcity is the whole point. To a retiree watching prices climb while their savings sit still, owning something that cannot be devalued by a printing press is deeply, deeply reassuring. And this isn't just ancient history or theory. Look at what's happened just in the last several years as inflation roared back into everyone's life for the first time in decades. Since 2020, the price of gold has climbed more than 230%. In 2025 alone, it rose about 64%. its single best year since 1979. Now, I'll caution you not to expect numbers like that every year, because you shouldn't, and we'll talk honestly about that later. But the pattern is telling. Precisely when the dollar was losing ground fastest, when prices at the grocery store were climbing and people were feeling the squeeze, gold did exactly what its 5,000-year reputation promised it would. It's easy to dismiss gold as a dusty old idea until you watch it do its job in real time, in your own era. That's reason number one, and it is a genuinely good one. The second reason builds on the first, and it's bigger, and it's exactly what those central banks are responding to. Retirees are turning to gold because they've grown uneasy about the US dollar itself, not just its shrinking value, but its long-term place in the world. Let me explain this carefully because it's the most important idea in this whole story, and it's the piece almost nobody explains well. For about 80 years, the US dollar has been the undisputed king of the world's money. Picture ships carrying oil, wheat, and manufactured goods across oceans, with contracts priced in dollars. When countries trade oil or wheat or manufactured goods across borders, they mostly do it in dollars. When nations want to store their national wealth somewhere safe, they've traditionally bought U.S. government bonds, which is really just lending their savings to America. That global demand for dollars is an enormous part of why the dollar has been so mighty for so long, and why America has been able to borrow so freely. But something is shifting beneath our feet. The United States now carries a truly staggering pile of debt. Tens of trillions of dollars, a number so large it stops meaning anything to the human mind. Around the world, nations have started step by step to reduce their dependence on the dollar. They've watched America's debt climb. Some have grown wary of relying so completely on one country's currency, and so they've gone looking for an alternative, something neutral, something no single government controls, something that has meant wealth to every civilization that ever existed. They chose gold. And there was one specific event that accelerated all of this, and it's worth understanding, because it explains the timing. A few years ago, in response to a geopolitical conflict, the assets that one large nation held in the Western financial system were frozen, locked up, made unusable, essentially overnight. Now, set aside the politics of that entirely, that's not my point. Picture a vault door slamming shut, accounts on a screen turning inaccessible, and officials realizing that money held inside another system can be switched off. That is what every other nation on earth took away from watching it happen. Money held as someone else's promise, as bonds, as entries in someone else's banking system, can, under the wrong circumstances, be frozen. But gold sitting in your own vault, on your own soil, cannot be. No one can freeze it from afar. No one can switch it off with a keystroke. That single realization sent central banks around the world scrambling to hold more of their wealth in the one asset that answers to no one else. And this is what produced that historic moment I mentioned at the start. In 2025, the value of the gold held by the world's central banks rose past the value of the U.S. Treasury bonds they hold. More gold than American debt, for the first time in nearly 30 years. The dollar's share of global reserves has been slowly, steadily declining for 2 decades. This is not a wild prediction. It is happening right now, measured in tons and trillions, inside the vaults of the most serious institutions on the planet. Now, I want to be very clear and very responsible here, because this is exactly the spot where fear peddlers try to frighten you. I am not telling you the dollar is about to collapse. I don't believe that, and anyone who tells you they know that for certain is trying to sell you something. The dollar is still the world's dominant currency, and will be for a long time. But, and this is the key, you don't need a collapse for any of this to matter. You only need a slow shift, a world that leans just a little less on the dollar with each passing year. And in that kind of world, the thing that has been money for 5,000 years, the thing every nation still recognizes and no government can control, starts to look less like a dusty relic and more like something wiser: insurance. Insurance against a future none of us can predict. That is precisely what those central banks are buying. Not a lottery ticket, a hedge. And here's what I find genuinely fascinating about that, and worth pausing on. Central banks are not emotional creatures. They don't panic. They employ armies of the most level-headed analysts alive, and they answer to their entire nations for every decision they make. So when institutions like that steadily year after year move a larger and larger share of their reserves into gold, they are not chasing a headline. They are making a sober long-term judgment about where the world is heading. You do not have to agree with that judgment, but you would be wise to be curious about it, because the people making this move can see the inner workings of the global financial system more clearly than anyone alive, and they are voting with their vaults for the metal. The third reason is far more down to earth, and it's a principle every retiree already understands in their bones. Don't keep all your eggs in one basket. Think about where the typical retiree's money actually sits. It's almost always in some mix of two things: the stock market and the bond market. Stocks and bonds. And most of the time, that's a perfectly sensible place to be. I want to be clear, I'm not against either one. But here's the worry that keeps thoughtful people up at night. Stocks and bonds are both, ultimately, tied to the same financial system and the same investor confidence. In a genuine, gripping panic, a 2008-style event, where raw fear seizes the entire market at once, they can tumble together at the very same time, when you least expect it. And when you are 72 years old, a serious market crash is not the same thing it was at 42. At 42, a crash is a bad year you'll recover from over the next 2 decades of working and investing. At 72, you're not adding to the pile anymore. You're living off it, drawing it down. A deep crash at the wrong moment can do permanent damage because you're forced to sell your investments at their lowest just to pay your bills. And those dollars never get the chance to recover. That's the nightmare, and it's a legitimate one. Here is what makes gold so interesting in that picture. Gold often, not always, but often, marches to the beat of its own drum. Financial folks describe it with a fancy phrase: gold has historically had low correlation to the stock market. In plain English, that just means when stocks zig, gold frequently zags. They don't tend to move in lockstep. So a modest slice of gold in a retirement portfolio can act like a shock absorber or like ballast in a ship. Picture a small boat in rough water with a heavy weight keeping it steady. In the frightening years, when your stock statements are bleeding red and you can't bear to open them, your gold may be holding steady, or even climbing, as scared money from all over the world floods into it looking for safety. Now, I'll be honest with you, because I promised I would. This shock absorber effect isn't perfect. In the very worst days of a true panic, when people are desperate to raise cash, they sometimes sell everything at once, even gold, and it can dip too for a stretch. So it is not a magic force field, but historically it has fallen far less than stocks in a crisis, recovered far faster, and over the full arc of a downturn, it has done its job. It has been the calm corner of a house on fire. And for a retiree, having one calm corner, one part of your savings that isn't panicking when everything else is worth a great deal. It doesn't make you richer in the good years. It steadies the ship in the bad ones. And this late in the voyage, steadiness is not a small thing. Let me make that concrete, because it's easy to say diversify and hard to feel it. Picture two retirees who both had $100,000 when a serious market storm hit. The first was entirely in stocks. When the crash came, her $100,000 dropped to 70, then 60, and because she needed to pull money out to live on, she was forced to sell shares at those low prices, locking in the losses, and her portfolio never fully caught back up. The second retiree held the very same stocks, but had placed a modest slice, say 10%, in gold. When the storm hit and his stocks fell, his gold held firm and even rose as frightened money poured into it. So when he needed cash, he could sell a little gold instead of selling his stocks at the bottom, leaving his shares intact to recover when the skies cleared. Same storm, same starting amount, two very different outcomes. And the entire difference was that one of them had a little ballast. That is the unglamorous job gold does in a retirement. It's not exciting. It's just the reason one ship rides out the storm while the other takes on water. The fourth reason is more human than the others, and I think it's underrated. Gold is a real thing you can actually hold in your hand. Stop and think about what almost all of your wealth actually is today. It's numbers on a screen, your retirement account, your bank balance, your investments. Nearly all of it is digital, abstract, existing only as an entry in some institution's computer system, accessible only so long as the power's on, the network's up, the bank's open, and the whole delicate machine keeps humming. For most of human history, people would have found that a strange and nervous way to hold everything they own. And for a certain kind of retiree, someone who lived through hard times, or whose parents drilled its lessons into them, someone who remembers when trusting big institutions blindly was a luxury you couldn't always afford. There is a profound, almost primal comfort in owning something real. Picture a gold coin resting in an older person's palm. Heavy, solid, and unmistakably there. A gold coin is not a promise. It's not an entry in a database that could be frozen, hacked, errored, or lost in a keystroke. It is wealth itself, in your hand. The experts have a term for this. They say gold has no counterparty risk. That simply means its value doesn't depend on any company staying in business, any bank staying solvent, or any institution keeping its promises. A share of stock is only worth something if the company behind it survives. A bond is only worth something if the borrower pays you back. Gold doesn't need anyone to keep a promise. It just is what it is. In a world that feels increasingly digital, increasingly complex, and to many people increasingly fragile, that tangibility scratches an itch that no brokerage statement ever could. It's the difference between a photograph of a meal and the meal itself. And the fifth reason is the one that is most alive right at this very moment, and in some ways it's the simplest of all. The world feels genuinely uncertain right now, and gold is doing exactly what is always done in uncertain times. Just look around at the landscape, geopolitical tensions and conflicts flaring in multiple corners of the globe. A steady drumbeat of unsettling headlines, political division here at home so deep that people across the entire spectrum feel anxious about what comes next. A widely shared sense, you feel it, I feel it, that the ground is simply less steady than it used to be. And in exactly this kind of environment, fear, uncertainty, a deep human hunger for safety, gold does what it has reliably done for thousands of years. People flock to it. The experts call it a flight to safety. When human beings get frightened about the future, their money instinctively runs toward the things that have survived every crisis in history. And nothing has survived more crises than gold. Think about what this metal has already lived through. It was money through the fall of the Roman Empire. It held its value through world wars, through revolutions, through the complete collapse of currencies that turned people's paper savings into worthless wallpaper practically overnight. Empires have risen and crumbled to dust. Entire monetary systems have been invented and abandoned, and through every last bit of it, gold endured. It has never, not one single time in 5,000 years of human history, gone to zero. There is almost nothing else you can say that about. And retirees today, watching the news with a knot in their stomach, are reaching for exactly that, the one asset that has always, always endured. So there they are, the 5 real reasons sensible retirees are turning toward gold right now. Let me gather them in one place, because together they tell a genuinely compelling story. 1. Gold protects against the relentless theft of inflation because it can't be printed. 2. It's insurance against a world slowly, measurably leaning away from the US dollar, the very shift the central banks are responding to. 3. It diversifies you away from a portfolio that's entirely at the mercy of the stock and bond markets, acting as ballast when storms hit. 4. It's real, tangible wealth you can hold, dependent on no institution's promise. And 5. It is the ultimate safe haven in an uncertain age, the one thing that has endured every crisis in human history. Those are not foolish reasons. They are intelligent, time-tested, and, as we've seen, shared by the single most sophisticated group of money managers on the entire planet. If you felt the pull of gold yourself, I want you to understand that your instincts are in genuinely excellent company. But now I want to keep my promise to you because I told you at the start I would be honest, and honesty is the only thing that makes the rest of this worth listening to. Gold is not magic. It is not a miracle. And there are real, practical things about it you must understand before it goes anywhere near your retirement. These aren't reasons to avoid gold. They're simply the truth of what it is. And knowing them is the entire difference between owning gold wisely and owning it foolishly. The first honest truth is this. Gold's price goes up and down, and sometimes it swings hard. I don't want you walking away thinking gold is a smooth, steady, ever-rising escalator, because it isn't. Let me give you a live example, one happening as I speak. In late January of 2026, gold soared to an all-time high, briefly touching around $5,600 an ounce, an absolutely spectacular run. And then, over the following months, it corrected sharply, falling more than 25% back toward the $4,000 range. Picture someone buying at the peak, then checking the price a few weeks later and seeing a large red drop on the screen. Anyone who bought at that very peak, caught up in the excitement, watched a big chunk of their money evaporate in a matter of weeks. Now, over the long sweep of history, gold has trended upward and preserved wealth beautifully. But in the short run, it can be a wild ride, and there have even been long stretches, years at a time, where gold went nowhere or fell. So gold is a long-term store of value, not a get-rich-quick scheme, and never ever money you might need to spend next month. If you understand that going in, you'll never be one of the people who panics and sells at the bottom. The second honest truth: gold doesn't pay you anything to own it. This one matters enormously for a retiree, so let me be plain. When you own a good stock, it often pays you a dividend, a little check just for holding it. When you own a bond, it pays you interest. When you own a rental property, it pays you rent. Those assets put money in your pocket while you sleep. Gold does not do that. A gold coin sitting safely in a vault will never mail you a check, never pay you a dividend, never pay you a nickel of interest. It simply sits there, being gold. Your entire return depends on its price rising over time. That's not a flaw exactly, it's just the nature of the thing. But it means gold plays a very specific role. It is there to preserve your wealth and steady your portfolio, not to generate the monthly income you live on, which is exactly why thoughtful people treat it as one piece of the puzzle, not the whole picture. And the third honest truth: physical gold is a little less convenient than tapping a button on a screen, and you should know that going in. If you own gold coins or bars directly, you have to store them somewhere safe and secure, which means a good home safe or a safe deposit box or a professional insured depository. Picture three very different storage choices: a heavy safe bolted into a floor, a bank safe deposit box, and a guarded professional vault. And if you ever need to turn that gold back into cash, it's not quite as instant as selling a stock. You have to find a reputable buyer and complete the transaction, which takes a bit more time and effort. None of this is a deal breaker. Millions of people handle it easily, and there are simple, well-established ways to own gold that take care of the storage and the logistics for you. But it's an honest part of the picture, and I'd be doing you a disservice to skip it. Gold is a store of value you hold for the long haul, not petty cash you shuffle around week to week. So now you have the whole, honest picture, both the powerful case for gold and the practical truths about its nature. And notice what that complete picture actually tells you. It doesn't say avoid gold, and it certainly doesn't say pour everything you have into it. It says something far wiser and far more useful. Gold can be a genuinely valuable piece of a well-built retirement, a real one, with a real and ancient purpose, as long as you understand what it's for and hold it the right way. And what is the right way? Let me give you the principles the thoughtful people follow, the ones who are genuinely glad they own gold. First, they treat it as a slice, not the whole pie. Even the mainstream financial advisors who believe in gold rarely suggest putting more than a small portion of your savings into it, often somewhere in the range of 5 to 10, maybe 15% at the very most. It's the ballast, not the ship. It's the insurance policy, not the entire financial plan. A little gold can steady a retirement beautifully. Too much of anything that pays you nothing can weigh it down. Second, they buy it to hold for the long term as protection and peace of mind, never as a quick gamble on next month's price. And third, they take the time to understand what they're buying before they buy it, rather than rushing in on a wave of excitement or fear. Slow and deliberate wins this race. It always has. And if you want a simple place to start that education, I'll leave a link below to a free Gold IRA information guide. It walks through how physical gold can be held inside a retirement account, how a rollover from an existing IRA or 401k can work, what the IRS rules are, and what you need to understand before moving any retirement money. Again, this does not mean gold is magic. It does not mean you should put your whole retirement into it. And it does not mean you should make a rushed decision because of one breakdown. But if inflation, market volatility, government debt, or the long-term future of the dollar has you thinking about whether physical gold belongs anywhere in your retirement plan, the guide is a good place to start. You don't have to buy anything. Just use it as a free educational resource, take your time, and decide for yourself whether a gold IRA makes sense for your situation. Now, let me leave you with the bigger point, because this is really what the central banks and careful retirees seem to understand. The reason those central banks are buying gold, the reason sensible retirees are following their lead, is not fear and it's not greed. It's something much older and much wiser than either. The simple desire to protect what you've worked a lifetime to build against a future that none of us can see. Gold has done that one job, imperfectly but faithfully, for 5,000 years through everything history could throw at it. That's not a fad. That's not a headline. That's a track record longer than any nation currently on the map. So if the idea of owning a little something real, a little ballast against an uncertain world, a small share of the same insurance the most powerful institutions on earth are buying right now, if that speaks to something in you, then I'd say your instincts are sound and you're in very good company indeed. The whole point was never to gamble your retirement on gold. The whole point was to protect it. And now, unlike the vast majority of people who own this ancient metal, you actually understand why.